first quarter of the fiscal is the biggest one for luggage companies and for VIP after a long wait of 2 years. Q1 FY23 turned out to be a normal quarter from a demand perspective. The company did not lose the opportunity with revenue crossing the pre-pandemic levels. Gross margins that has been on an upward trajectory with the preponderance of own manufacturing was subdued thanks to the steep rise in raw material prices that couldn't be offset by the price hikes taken so far. Operating margins were the highest since Q1 FY20. The market share gains from unorganized sector were visible and the significantly reduced sourcing from China puts it ahead of competition. With demand on a secular trajectory and VIP's change in business model from a trader to a manufacturer being margin accretive, we see the company in a sweet spot in the foreseeable future. The stock deserves a place in the core portfolio and the current market volatility presents an ideal opportunity to buy into this strong business. With mobility improving, travel on an upswing, schools, colleges, offices, all of them reopening and wedding season back in full swing, demand was robust in the quarter gone by and the company saw its highest Q1 revenue. Interestingly, this revenue performance was despite the absence of Future Group, which made up for close to 15% of pre-pandemic revenue. The quarterly numbers are not comparable as year-ago quarter was impacted by COVID second wave and the preceding quarter had partial impact of the third wave. The key figure nevertheless to note is the sequential drop in gross margin as price hikes lagged input cost inflation. In fact, the sequential decline in gross margin was largely on the back of higher raw material prices and inferior product mix that was essentially skewed towards value segment, negated only partially by the pricing actions taken so far. With the value segment driving demand and inflation pinching household budgets, the company is wary of a steep price hike which could hurt demand eventually. Travel is witnessing a surge never seen before and this isn't a blip. In addition, the luggage industry is witnessing a growing shift towards branded goods. The industry is expanding horizontally with the emergence of new customers. Rising demand for premium luggage, a growing need for casual luggage to meet varied needs, indulgence in frequent holidays, increasing spends on weddings and travel for education are some trends that will keep expanding the market. The business model for VIP is changing fast from importing everything to China to own manufacturing through its facilities in India and Bangladesh. Now this will provide a structural kicker to margins. Direct import of finished goods from China were 11% of revenue in Q1 FY23 compared to 40% pre-pandemic and own manufacturing is expected to be around 75-80% of the revenue in FY23. The company mentioned cost advantage of 15% from its Bangladesh production vis-a-vis China sourcing. Now this puts it in a position of strength vis-a-vis competitors that are over-dependent on China, not only in terms of cost but also in terms of reliability of supply. There's a strong shift in the market in favor of hard luggage made with high-tech plastics such as ABS, polycarbonate or polypropylene which are lightweight and durable. VIP is seeing a rapid increase in share of hard luggage from 27% 3 years back to 45% now. The switch from PC to PP, which is more cost-effective, is a strategy being actively pursued to improve market share in the value segment while improving margin at the same time. Now, luggage industry has a dominant share of unorganized players. Pre-pandemic, the size of the industry was close to 9,500 crores, dominated by the unorganized players, about 60 to 65% of the market made up for unorganized. Post-GST itself, a value player like Safari with its mass brand wrested market share from unorganized, and now VIP is also seeing strong traction in its value brand Aristocrat and Alpha, partly as a result of the shift away from unorganized players. The pandemic has worsened the plight of the unorganized players as they are yet to fully recover from the supply chain disruption and inadequate cash flows. Disproportionate reliance on China and a high inflation environment can only worsen the situation for them. As of now, exports aren't meaningful. However, the cost advantage emanating from own manufacturing coupled with the company's quality standards position it as an attractive alternative to China, especially with several luggage importing countries looking to diversify and de-risk their supply chain post their experience during the pandemic. While there are new entrants in the market, they are unlikely to pose a serious threat to the oligopolistic nature of the market, which is now dominated by VIP, Safari and Samsonite. VIP is a brand that's much respected, has a multi-channel presence through wide stock-keeping units. It captures varied price points through its offerings across Aristocrat, VIP, Skybag and Carlton, and is strategically expanding its footprint. It has a strong balance sheet and we expect healthy earnings CAGR for the next few years. The valuation is still at a discount to most other consumption categories. We feel the sector offers great potential and VIP is a strong play to ride the tailwinds. Of course, like any other sector, there will be some key risks to keep on your watch list. Inflationary impact on input prices, a weak currency which could potentially hurt imported raw materials. Severe economic slowdown impacting demand could be also an important risk to watch out for.